This episode of the Blockshots podcast is sponsored by Block Capital. Block Capital is a leading digital assets investment firm based out of Middle East and Asia. The firm has an impressive portfolio of over 100 blockchain projects. Block Capital is a thesis-driven venture capital firm that focuses on all sectors of crypto and has a special interest in DeFi and infrastructure projects. You're listening to Blockshots, the latest media offering delivered to you by the CoinCodeCap team. On our episode today, we have Santiago Santos, who was previously a partner at Parafi Capital, one of the earliest and leading crypto VC funds. He's also an active angel investor and what many of you might recognize as a CT influencer with over 90,000 Twitter followers. So really glad to have you, Santiago, today on our podcast and learn from you.
Thanks for having me, Akash. Really excited to be here and talk about a number of things.
Awesome. So, let's straight up get into it.
Mm-hmm.
And my first question to you would be, because I was on your Twitter today and I see that, you've been tweeting about today's events a lot.
Mm-hmm.
For context, today's events are about Russia invading Ukraine. So, do you want to maybe speak a little bit about on it, especially with respect to, how us as the participants in the crypto market should navigate?
Yeah. Well, look, I'm not a macro expert, not a geopolitical expert. My appreciation, obviously, is that this has been a point of contention. Russia has felt that NATO has been encroaching on their territory, and this is, I think things have escalated, and now obviously, they've invaded Ukraine, and I think, as an investor and thinking about kind of why we like crypto, I see this as it's very unfortunate, obviously, that we in today's day, 2022, we have wars. Yeah, and these are it's very saddening to see it. My thinking though is, oftentimes and unfortunately, crises, wars are catalysts for awakening and change, and it's unfortunate that it has to be this way. But I think when you're forced in dire circumstances, I think that the case for crypto sort of solidifies and becomes more clear for so many other people. And so for me, my long-term thesis continues to be very strong and unchanged. I mean, I continue to believe that we are in a very kind of secular transformation where people are very disillusioned with existing institutions, whether it be governments, health authorities, the media. And we've been sort of in that transition over the last 20 plus years. And, one of my favorite books is The Sovereign Individual, which kind of predicted this shift, which is people now are looking for alternatives, and crypto really is front and center to that, when you can have non-sovereign stores of value or ways to interact with other people without this central authority. And I think that becomes very important in the global context. Of course, we're entering this sort of geopolitical stage where countries like Russia might use something like Bitcoin to circumvent SWIFT and sanctions, which is problematic. I think that is something that I do think about and worry about a bit. But largely, the stuff that I care about really is as I'm really excited about a lot of the things that are happening in crypto. And so, look, I mean, I think near term, you have these shocks, whether it's rate hikes and inflation or obviously wars. But long term, I continue, my thesis and my conviction in crypto is very much unchanged. If anything, it's just probably stuff like this shortens the cycle of adoption, because more people just wake up to the power of being your own bank, of owning your own keys, of owning your own assets and digital property that transcends sort of local jurisdictions.
Right. Especially, what we saw on the Russian stock market with their, I think, indexes, what happened with them today. I think more and more people realize that a sovereign asset that isn't dependent on one country's, news is probably a better way to put your life savings into. But while we're on that, why I raised that question first was because, in general, the sentiment around the current cycle that we're in. And I mean, I guess it's like a two-part cycle that we've been seeing this past entire year. In general, the sentiment has been sort of dwindling. We already had like a small crash at the end of January. And now with this news, there's also a bunch of FUD that's happening with the war and everything. So as someone who's on the VC side, who knows the industry like really in depth, knows what's happening like actually behind the scenes in these teams, do you think that, I mean, the music might be over for this cycle? Because why I'm asking that is because personally, as someone who's also in the same VC side of things, I'm seeing that development isn't like catching up to the valuations that people are, raising funds at or doing their sales at. And I feel like it's something that might work at the beginning of a cycle, but it's not something that can prolong for multiple years without delivering quality products, right?
Yeah. Look, I mean, I think it is very difficult for me to time markets. I haven't met anyone that systematically is able to time markets. Is the cycle over? I don't know. Are we in a super cycle? Unlikely. Like things do. There's always this case where it's not only inherent to crypto where you have narratives always get ahead of fundamentals. And the pendulum swings to extremes. You're either in peak fear, peak euphoria, and pick your place. And so, how do you manage that as an investor, right? I've always felt the most comfortable investing behind very passionate, competent, sharp teams building, and have especially investing in a very early stage, and they have decent runway, right, where their burn rate's not too high. And they're building at critical kind of pieces of infrastructure or killer use cases. And so a lot of what I've been doing lately is investing in gaming and NFTs, particularly gaming and NFT infrastructure. And obviously I was investing in DeFi a lot before this at Parafi and just personally before that. And so the reason why I became interested in all this is I think like a lot of the problems in DeFi get solved because if you fix NFT infrastructure and use cases to bring utility and financialization of NFTs, you fix a lot of issues with DeFi, like mainly the Oracle problem. Like how do you price illiquid assets like NFTs? And that improves DeFi. And so, I mean, all this to say is, look, crypto's not going to go away. I don't think so. Back in 2012 when I started investing, there was a very credible higher probability that, crypto was more fragile back then. But now you have like so many different use cases. And the difference between 2017 and today is that you are getting a lot of usage of these crypto applications. Like look no further than gaming and NFTs. And that's a different set of people that are coming into the space. But I'll just put out a couple different things quickly. One is this space is not uncorrelated. This is a very much correlated asset class. It's a risk on asset. And so when you see moments and shocks like you are seeing right now in the global kind of markets, crypto is going to trade like a risk on asset. It will, right? And so coming into the space, you shouldn't be thinking this is going to be an uncorrelated asset class because candidly, the data doesn't suggest that. And this asset class hasn't really started after the global financial crisis. And so anytime there's a shock, whether it be COVID or rate hikes, like crypto, Bitcoin, and other assets very much trade at a higher beta, and so than the Nasdaq, for instance. And so I would caution this narrative that it's uncorrelated. Maybe in the long term, sure, fine. I do think that like I'm always an optimist. So point number one. Point number two is I think like okay, you're gonna during these shocks, people go to cash because they need to readjust, they need to understand how are they going to survive and weather the storm, right? And then very quickly they say, okay, how am I going to beat inflation, or how am I going to beat the benchmark, right? If you're a pension fund, if you're whatever, like you want to beat inflation, right? And so, and candidly, I think the answer to all of this is you want to be investing in high growth areas where there's a lot of innovation. And crypto today is attracting the smartest people, and increasingly so. And so that's why I feel really comfortable investing in this asset class, because I think it's real. One, we're super early. Two, I think we're seeing a lot of adoption. And three, I think if you're investing in an early stage kind of killer use cases, then I think like you take that long-term view and if you're patient, I think like that's where I feel comfortable, right? None of this financial advice, but I think like the problem is like when you're using leverage, when you're impatient, when you always feel like a lot of this game is you get the thesis right, but you don't express the thesis in a very accurate way, meaning you either are playing with leverage as a percentage of your portfolio might be too high. And so you need to, half the battle is getting the thesis right. The second one is expressing that thesis correctly through portfolio construction. And so I think like when you're like, I've always felt like I always kind of push myself in a boundary where sometimes I'm not very comfortable. Either most of my portfolio is kind of liquid, investing in early stage stuff, but I just have other ways to like, I have other pieces in my portfolio that are not that, right? And so I don't try to be a hero, right? I don't, there's a lot of this stuff like, oh, you need to be hodler, you need to like subject yourself through pain and cycles. Like there are ways to manage these things, right? There, again, the other point I'd say is relative to 2017, today we have a lot of usage. B, we have different use cases, like NFTs is very different than Bitcoin, right? And the type of people that are coming into the space is vast and more diverse. And I think like now you have this entire kind of ecosystem called DeFi where you have stablecoins and the ability to earn yield, and that's very compelling, right? That in 2017, a lot of it was just like rotation from ETH into alts, and then when the market kind of collapsed, like it was very reflexive. Now it still is, by nature of how DeFi works, but I think like you have a very interesting dynamic here where you can rotate into stablecoins. There's a lot of stablecoins in exchanges, I think, and so for that reason, I mean, earning yield is a killer use case. And so, anyways, that it's a ramble, but I think like this is how I think about just generally. I don't pay a lot of attention to macro. I appreciate it, but I'll say time in the market will always be timing the market. Like I have never met anyone that can time markets systematically.
Yeah,
but if you're
I'm saying that makes complete sense, and I guess like being hedged at this point is probably the play regardless of where the market moves. But why I sort of went in that direction is because for a lot of people, who might be listening to our podcast or in general consuming content in crypto, many people have just joined the market this cycle and it's their first cycle, including myself, right? So for someone like you who's seen like so many ups and downs over time, what do you recommend for people who sort of want to build longer term conviction and maybe even want to dip into the space full time or something like that to navigate the beginnings of crypto and like how to get into it and deal with all this pressure around hedging against all this volatility?
Yeah, look, I think always invest in yourself first. The mistakes I made over the years is when I didn't take the time to fully appreciate what I was investing behind or getting involved in. And I think the luxury of taking the time to learn, to get involved in these communities, which are really open. Anyone can join a Discord group. I mean, this is the power of open source. And this space is very open, it's very welcoming. And talent gets discovered faster in open source systems and communities than closed systems that are more hierarchical. And so I've seen, and look at Parafi when I was there, I hired Nick, who was, very young. I think he was 18 at the time. I discovered him on Twitter and I hired him a week later or 2 weeks later. And it was one of the best hires that I did. And so I think that's like a case study and emblematic. Okay, it's anecdotal, but I think I've seen this time and time again where, whether you're an artist or whether you're like, it's not just engineers. I mean, engineers obviously are hard to come by and it's sought out talent, but there's so much of this space that you can come in here and find opportunities to get involved in this space. It's not all about investing. If anything, I think the best investors in the space have been builders at some point, or at least have used this technology. And so, I think it's important to be patient. It's important to also use these applications and get involved in these communities and understand and be critical and skeptical, because this is not a perfect community. This is not a perfect environment, but we're trying. And I think that will, by virtue of being close to these communities and getting involved, you have a better probability of understanding what it needs to be built, what is working, what is not working, and that might inspire you to go and build or invest behind teams that are trying to build critical pieces of infrastructure or use cases that have latent demand. And so, but again, it starts and ends with always investing in yourself first. Like a lot of people say, hey, where would you invest X amount of money today? I'm like, wait a minute. Like, what are you talking about? Like, I can give you a recommendation now, but I don't like giving advice. B, I might be really bullish on a particular asset right now today, but it also depends on the valuation, right? Circulating and fully diluted. And so I never like to give this type of advice. I always say, look, it depends. You need to understand as an investor what your edge is. And also, the second point I'll make is you might love something, but that would be like a terrible asset. Like a great company, product, or service can make for a terrible investment if it's priced incorrectly. And conversely, a terrible product can be a great investment if it's priced, at pennies on the dollar. And so at the end of the day, price does really matter, and what the expectation of that is. And so again, back to your original question, like I see there are pockets of crypto that are totally left for dead and forgotten, largely a lot of DeFi. I think the attention is shifted to other pockets like the metaverse and NFTs, which look are I'm investing behind, and I feel long term I'm very excited about. But at the end of the day, you need to as an investor think and understand, what do you believe in that others don't, and what particularly are you seeing that will be true with a higher probability, you think probabilistically, but things that have been neglected. Because at the end of the day, you need to be very cognizant of price and what the expectation is for that, right? Yeah.
No, that makes complete sense. So, touching a little bit more on, your history at Parafi versus what you do now, I kind of wanted to understand how the investment thesis has changed, like operating as a partner to a LP-based fund versus an angel investor. And I don't mean in context of the sector that you're investing in. Like, for example, you mentioned you've gone more NFT and gaming heavy versus DeFi now, but maybe more around, let's say the way you evaluate a certain team or the kind of affiliation you have with them, the way you work with them, or also about how much risk you take in general, about, how long you hold your positions and things like that.
I think a lot of it is the same. The level of analysis and rigor is large. Like my investing framework hasn't changed. Perhaps the way that I express that, I am more nimble. There's no like investment committee, but I still do very much of the same kind of framework and processes to maintain discipline and document why I'm making decisions, right? I think as an investor, you always want to make sure that you're not making the same mistakes. And so, look, you're going to make mistakes, right? Investing. That is the name of the game, right? You cannot, as an investor, assume that you're not going to make mistakes. The goal is not to not make any mistakes. And the goal is to like improve your processes to minimize errors of process, understanding that there will always be errors of outcome. And so what I mean by that is it's hard for you to control an outcome. There are so many variables that are outside of your control. Ultimately, there is a lot of randomness in everything. And going into an investment, you always understand that there are known unknowns, unknown unknowns, and things that you cannot control. Now, there are things that I like to focus on, is how can I minimize and increase the probability of success here, given my value add, in particular in targeted areas. I'm not perfect. I'm not an expert in everything. I'm very upfront with teams. Look, I can help you X or Y or Z. But at the end of the day, like as an investor, I think you can perfect your process and minimize errors of process. So a lot of times, for instance, I'm investing and I say, okay, this is my expectation. So when I first invested in Ethereum, it was in the ICO, and so I said, look, I think this could truly be transformational, but this is kind of where I feel comfortable as an exit strategy or going into an investment. I think I have targets of what my expectation is of what is sort of the fan of returns and what are the different outcomes, right? Thinking probabilistically, like if you do a decision tree and how things might play out. When one version of this world, Bitcoin, really becomes digital gold, so it's an $9 trillion asset. And so, okay, well, fine. It's a 1 today, so it's an 8x from here. In another version, it becomes more than that. Or, for instance, Ethereum might become, capture a lot of value that it become like the settlement layer, the value layer of the internet. Well, that has much, much more upside. But probabilistically, that's, the outcome of that, like the probability of that's not 100%. And so, again, like I think my mental framework continues to be the same, which is I try to minimize errors of process constantly. And so a big part of that is documenting why I'm making decisions, why I'm making investments. And so I'll just give you another tidbit, which is, I passed on the seed round of Axie, much to my detriment. And it was a combination of things. A lot of it wasn't a big allocation. And so, I just sort of said, look, it's not going to move the needle. And so of course it would have, right? But hindsight's 2020. And so, that led me to, sometimes when you miss and you make mistakes, you don't want to look at them. But I just sort of obsess over them. And I was looking at that and I said, okay, why did I miss this? Okay, well, it was largely structural of why I passed. But just paying attention to what's happening in Axie led me to invest in Illuvium. you'd be the first investor there, like a seed investor, pre-seed actually. And so from that basis, like it was just really encouraging to see the traction that Axie was getting, and saying, wow, if a game like this gets this traction, then you're left wondering, what if? Then I want to invest in other games, right? Because the category is not winner take all, and there's going to be other games coming, and this play to earn is pretty interesting, right? Not perfect, but interesting. And so that has led me to grow my conviction levels on investing in super early stage gaming projects, and so I learned from that process, right? And so I think that's how I think of generally, investing. So long story short, but I think like it's very much the same. I'm also able to just be more nimble and aggressive and like invest in like kind of funky stuff like NFTs, and like, like sometimes it's difficult to do that from like an institutional perspective.
Yeah, or maybe even like explain why you want to put like $500,000 behind a JPEG. But outside that, I mean, you mentioned that you were one of the first people, maybe not one of the first people, but like one of the earliest people, because you invested in like the Ethereum ICO. So my question is, at that stage when the crypto markets were much smaller, things were more like the promises versus the reality was even the gap was even wider.
Right.
How do you sort of distinguish in these? I mean, there's one thing that there's a technology, and this is what that technology can do. But since it's a completely new paradigm in itself, how do you sort of like price it in, and also how do you evaluate the risk of it being complete vaporware and never materializing into anything? So, for example, after Ethereum, there's so many L1s. Some of them have arguably better specifications, so to speak. But then again, I mean, how do you sort of pick and choose between like a sector as to which one could be a vaporware, whose fundamentals are something that the market would actually value, and which technological improvement is just something that's there, but people might not really care if there's an improvement in this aspect of the project?
It's a great question. I think at the stage that I get involved, which is I try to be kind of the first check in, it's largely a people team bet. And so I always want to understand what they've done to date, what kind of character they have. Are they going to be building through a bear market? Do they have the conviction? What I look for in founders is I want to see that they have a unique insight. And so, for instance, Vitalik had, I think, unique insight in the sense that he had been involved and was a Bitcoin magazine and had an idea of building something other than Bitcoin, that Bitcoin couldn't address, meaning like more expressibility of smart contract. And then he had obviously a terrible experience playing World of Warcraft. And so that combination is, I think, inherent and emblematic of a lot of founders in the space, which come from and have thought about a lot of problems. And so I always look for, what is your unique insight? Like, why you, right? And so that allows me to, I think, just suss out a lot of the noise and just trying to infer, is there a signal, is there substance in the team that I'm investing behind? And to your question around like, okay, if you look at a lot of L1s today, I still continue to think, okay, obviously it is kind of tricky. I don't necessarily invest a lot in L1s. I'd like to invest in applications on top of L1s because I think it's a levered bet on the particular ecosystem. Like I think like DeFi and Ethereum was that. Like you're taking a long-term view on Ethereum as sort of the settlement consensus layer for a lot of applications being built on top. And but I think like it's sort of a levered bet on that. And so I like to invest in applications and smart teams building on top of that. And so, but you're right. I mean, I think as always, like if you're patient, like you could have invested in a lot of projects in 2017 and everything was like a white paper and an idea.
Yeah.
The learning that I had from that experience was you want to sort of invest in stuff that has as few dependencies as possible. So I'll give you an example. So like prediction markets I find fascinating. This idea of wisdom of the crowds and like, coming to, and in one version of this world, these become like information sources, right? Oracles of themselves, right? So like, okay, you get excited about prediction markets, you build a thesis, you think the prediction market is going to be a thing. Okay, fine. Then you say, okay, you canvas a market, say, okay, you stumble upon Augur. Okay, interesting. Good team, they've raised money, they're well capitalized. The problem with that is Augur hasn't really kind of worked because it has a lot of dependencies, especially early on. Like, settling prediction markets in a volatile asset like Ethereum is problematic. You needed to have a stable coin to kind of settle these markets, right? And do payments on that. And so in the absence of having a stable coin, it's very difficult to see how this particular use case, has a lot of potential, could probably work, will probably work, and will be mass, but it has a lot of dependencies. And or like social applications on Ethereum, difficult, right? Because in the absence of having an L2 environment like Polygon or Optimism or Arbitrum, it's very high gas fees. And so like ultimately, I think like that has led you to just invest behind DeFi, which is, by the way, and DeFi protocols and DeFi applications that are managing high value, perhaps low frequency interactions like, like AMMs or money markets, right? In a money market, you're only going there probably once or twice, very like the frequency that's low, but options, very difficult. And so because of high gas fees, that eats into a lot of your ROI. And so it's kind of difficult to see these, and probably haven't really, it's probably one of the reasons why they haven't really kind of worked in an L1 environment like Ethereum, which is very high, right? Like high gas fees. But, you pay attention to that and say, okay, you still believe in the category. Okay, well, go and invest in it in perhaps more in a blockchain like Solana, which has lower gas fees, right? And higher throughput. And so, I think like that's sort of things that I like to look at. It really, I think the key learning for me has been, so one, minimize like investments in dependencies, right? You want to invest in things that could work today that have probably like latent demand. And I think the second piece of that is just by using these networks and applications, I think you get a lot of insight. If you're not close to the metal, if you're not staking, if you're not participating in governance, you're not close to these communities, you're at a huge disadvantage.
Makes sense. So, I mean, when you say that dependency, I think it's a factor of two things, right? As to how many things you want to include in as part of your vision on your product, and also timing in general, because dependencies that might not be possible to execute on today might be patched on, 3 years from now, and maybe even Ethereum itself is like so scalable where you could do some version of an options market. But I want to like pull the conversation a little bit backwards, back to the original question around identifying these projects, especially in context of like changing market dynamics. So when you say that in 2017, people were investing on white papers, ideas, right? After that cycle, I think the current cycle, way more people have realized that, this is a sector where you can like raise money relatively easily, given, you have like the right sort of pitch. And there's a lot of people flocking into it, like newly, right? So how do you separate that crowd who's sort of like come in because of the hype? They're smart. They might be here, for a longer term, but they came in not because of years of investing their time into it, but because of all the mainstream hype that's around it. So how do you sort of like navigate around those teams and evaluate those teams on what they're building?
I think a lot of it is just intuition and pattern recognition. I get to probably meet with at least every day 3 teams, new teams.
Right.
And so I've been doing this for 15 years, I guess. And so like I think it's just pattern recognition, and you get a good, I think you over time, like you just develop this instinct of the kind of the fiber of the founder. And I think like I'm always kind of cautious and skeptical when I see a deck that emphasizes too much on like the Ponzonomics, and like, okay, we're gonna do this sale and this sale. I'm like, well, guys, like, what are you actually building? Let's focus our attention on that. And so it's always important to just stay focused on what is your North Star? Like, what is the ultimate outcome here? And also, a lot of founders, I want to see crazy founders that like will not stop, will drive through a wall to see their version of the universe come to fruition, and are so passionate about it. And so I think that's, I come from like, I love sports, endurance sports. And so like running marathons and stuff like this. And so I think like that has taught me a lot about you want to go fast, but there's also an endurance game here. And there's a lot of perseverance, and a lot of the best founders have a lot of this sort of drive that inspires other people to join the team. And so the best founders are really good at recruiting because they inspire other people to come join the mission and the team and the project. And so, you know, I think
Right.
that's sort of, I don't know, that it's perhaps a fluffy answer because it's not like very prescriptive, but
No,
that's
I
how I
mean,
tend to think of it.
it makes sense. I think like when someone has their own personal brand and has that pull in themselves, it's I think it's a good signal. I'm not sure how far that goes, but it's definitely a good starting point when you don't have anything. Like on top of that, wanted to ask you that once you are convinced on a certain thesis that hey, this is going to take off, prediction markets are going to take off, how do you sort of construct a portfolio around it? So like what I'm trying to ask is that is your approach more of a spreading your bets around, let's say if this is very, very new, I'm
Right.
going to invest in everyone who's trying to build this and one of them has to work out, or if it's more of a concentrated betting on like, after some more research, you realize, okay, no, I just need to bet on this one guy and I'm pretty sure he's going to take it all.
No, I like to, I mean, again, going back to an earlier thing I said, I think portfolio construction is really important. And I tend to think of this world thematically in use cases and applications and like gaming. And so, for instance, in gaming, I've invested in a number of projects. I don't think it's a winner-take-all category. I want to be, there are multiple different types of games. And so I, at that point, look at the best founders and teams that I can be supporting. There's many, it's not a winner-take-all market. Different if you're investing in an L1, right? I have invested in Ethereum, I have invested in Solana, I've invested, and so look at Cosmos, for instance. But I think, for L1s, it's a little bit difficult, or it's probably like I don't necessarily feel compelled to go out and invest in other L1s because I see a lot of I sort of follow developers and developer activity, and I think that has led me to just be very kind of focused and concentrated in Ethereum largely, and then Solana, to some extent Cosmos. But by and large, I mean, I think like crypto kind of allows you to invest in a number of projects, both on the private side and also liquid side. And I think it's very early. Like I'm not prepared to say, I'm not sure if we're like in the 1992, 94, 96 kind of phase, or are we in the post.com crash? And so I'm not sure if I'm investing in like pets.com or Petco. I'm not sure if I'm investing in like early Craigslist or Airbnb. You know what I mean? Like, so I think like for now, I will say a lot of my investments have been in infrastructure because I think like I've been on the fence. At least I think I faced with the choice of investing in infrastructure or consumer facing applications. I think there's much more. Historically, over the last couple of years, I felt that we just first have needed to build critical pieces of infrastructure for, again, to then support consumer-facing applications. So there was a lot of dependency there was a lot of risk in investing in consumer-facing applications because there was a lot of dependency on infrastructure being built, right? On L2s working, on other higher throughput kind of blockchains coming and being live. And so, yeah, but I like to place multiple bets. I mean, ultimately, I think the world probabilistically. And so I think ultimately, I think I never know with full certainty. I mean, I think like I'd rather make multiple bets, assuming that teams are okay and it's not conflicting, and ultimately you don't want to fully support direct competitors. But still, I mean, in a world of open source, everything can be perceived as competitive, and then so I think ultimately I always kind of want to go back to founders and say, do you have a problem if I invest in this other game, in this other application, and if so, I mean, I think then it leads me to be a little bit cautious and skeptical of teams that are too worried about competition. Ultimately, they when I hear a founder be super focused or when I hear a founder be so focused on the competition, then I'm like, why are you so focused on the competition? It's sort of a little bit distracting, right? Because open source is so competitive anyway. It's like anyone can come in and fork your code, but still, I think in this world, I think you win as a founder by out executing and out innovating the competition. And I want to be investing in those teams.
No, I think that's a great answer. I mean, in general, I think, I don't know if it's the time already in the crypto markets to do the concentrated betting strategy. So most VCs, from the biggest to the smallest, as far as I understand, are sort of spreading around their risk. And that's a good thing too, right? But The next thing that I want to talk a little bit about is your outlook for this year. So 2022, a lot has changed. How are we thinking about different sectors? And I want to start with DeFi first. We already spoke a little bit about Ponzinomics and how Ethereum DeFi has been one of the least performing sectors of the past year. So how are you looking at DeFi? What are some of the new trends that you expect to come along? I'll tell you a little bit from my perspective first. So I think so far DeFi mainstays has only been like very few kind of applications who've gone really big, lending, AMMs mainly. I think at this point now that we have so much more focus, more institutional capital flowing around, and sophisticated trading activity happening, I think more DeFi primitives will be born in this year. Things like margin trading or options. Options, I think we're already seeing the onset of, and maybe like a few more traditional analogs to DeFi. So yeah, I would love to hear your opinion on that, your DeFi outlook for 2022.
I think DeFi is primed, especially now with the rise of gaming and a lot of other applications, consumer-facing applications that ultimately will tap into DeFi in the back end. A lot of times, like very few people think about their bank account on a daily basis. They don't think about like financial applications. It's daunting. It requires a level of sophistication. But I think more and more what's really exciting is you have this entire ecosystem of DeFi applications that have been built, increasingly work and talk to each other in very interesting ways, enable not only existing use cases, but also like super cool primitives like flash loans that a lot of people may not have an appreciation for it, but I think we are going to see probably another way of DeFi, which looks very different than DeFi Summer. DeFi Summer and largely to date has been very sophisticated financial people with knowledge that are interacting using these protocols. But I think like ultimately we'll see the rise of usage where applications, consumer-facing applications, abstract away the complexity of using these protocols, but still tap into a lot of the benefit, right? And so that really drives a lot of adoption. And so, for instance, you come in, you start earning SLP by playing Axie. Well, you want to swap that, right? Okay, you swap that. Well, you're going to use an AMM for that. Once you swap that, you say, okay, what else can I do here? Well, I want to think about saving and earning interest. Okay, well, you're probably going to use some protocol, yield earning protocol like Friction or Yearn or what have you, right? And that's what I mean, right? And so these consumer-facing applications probably will make it very, very easy and intuitive from a UX perspective for these users to address their basic kind of needs. Maybe not basic, but just their needs, right? And so I think like as more and more people come to the space, the ability to earn yield and interest on your savings, like and using stable coins for a number of range of outcomes like payments, right? Or just savings is massive. And that is going to lead to a lot of usage of these DeFi protocols. And so that's why I feel that, DeFi will move and grow in lockstep as we see more adoption. And I think that exists today is NFTs. A lot of people like are coming into the space as newcomers to collect NFTs. And then once they're here, a lot of them will probably start using other applications, maybe gaming, to play to earn or play and earn. And then that application, that wallet, that will probably allow them and suggest and nudge them to use other things and ultimately become their bank, right? And so I think that's where that's where I see DeFi kind of thriving in the near future, and maybe this year, next year. And I think a testament to that, and I think you're already kind of seeing it with Terra, right? Terra started as a stable coin focused on e-commerce, like Chai, this wallet to pay for stuff, and it would give you loyalty points and rewards and incentives. And then they layered in Anchor to earn interest, and then Mirror to invest in like stocks. And so, but it starts with kind of a killer use case, in this case, e-commerce. And so I think Terra has been really thoughtful in addressing kind of the needs of the consumer and the user first, and then layering on top of all these different services that are pretty sophisticated, but abstracted with the complexity for the user. And I think that's where I'd be really kind of interested in those type of applications that appreciate that the user might not be a yield farmer expert, nor will they ever be, right? That's kind of unrealistic to assume.
So I think what you're pointing towards is basically like a more composable sort of DeFi, but like instead of composing between DeFi to DeFi protocols, we're going to see more synergies with, protocols that we might not think are DeFi, like play to earn games or NFTs, and they have all these like, backend abstractions and features that are enabled through a DeFi layer, right?
Absolutely. Yeah.
Awesome. Yeah. So I do think that's definitely a winning trend that we're going to see, if not this year, then eventually anyway. And also like a C DeFi trend, which I think is probably prime for disruption, because I think the current market with Nexo and BlockFi and all these guys, I don't think they are yet to release products where people can actually like get DeFi level yields, even though like it's volatile, just through like a centralized app experience. So I definitely think that's also a place where a lot of TVL is going to be accumulated. So the next sector that I would quickly want to get your opinion, and especially because you said that this is something that you're actively angel investing in, is the P2E opportunity and how you're essentially evaluating these games. And why I want to ask you this is because with P2E, the way I see it, to me it feels like a hits business, right? Like a music soundtrack, right? The first single might be a hit, goes to Billboard top 10. The rest of the album might be a dud, even though it was by the same artist, right? So I think games have that thing where something just takes off, so it really goes off, and the others people never want to play. So how do you sort of like have a framework for evaluating which games have a higher chance of being successful games in longer term versus not? Like, is art something that you look at? Is gameplay important? Like, these are the kind of questions that I want you to touch upon.
Yeah, like in my NFT collecting games, I've invested in a lot of games that I would play. Actually, that's kind of like the main proxy litmus test is, do I see myself playing these games? And if not, so that's always the easier kind of game to invest behind. So Illuvium was like front and center. I said I could play this game. Like I saw the kind of the idea, and I said I love game lore. It feels to me like a combination of like World of Warcraft and Zelda, and I love those two. And I said done. Like it had a great team, and so for me that was easy to invest behind. And so I love that type of project where it comes to me and says this is the kind of game, this is kind of the analog, like this is kind of the game that we're building. And if I could see myself playing, it's very easy for me to invest behind. At that point, it's just is a team bet. The other, of course, is like, are they building a game that has proven interest? And a lot of times, it's taking something that exists in Web 2 and saying we're gonna build a similar game like this, and then layer on a lot of the functionality and kind of elements of Web 3 that are pretty cool. And so that's kind of the second bucket of games that I invest in.
Right. So essentially, you're saying that gameplay models or things that have already been successful, like an FPS genre, that sort of implementation with Web3 elements, right?
Right. Exactly.
So, I mean, I understand that, and that's probably like a rational way to go about it. But then with blockchain and P2E gaming, there is this entire, the token side and the economic side of things. And what I see right now is that the game economics for most of the games only work if there's like an up only situation.
Right.
The moment that stops,
Yeah.
It really like sort of like falls back into itself.
Absolutely.
Because I think what it comes down to is that right now the most popular games even are not really that fun to play as a game itself. So maybe that has a part in it. So like, how do you think about the economics side of like the P2E, the E side?
It's a great question. I think like play to earn is probably a misnomer. Like I think I do wonder how sustainable these economies are. I think a lot of games in Web 2 have relied historically on spenders.
Yeah.
And I think you need immersive games to attract that type of crowd, which is loves the game, plays the game, loves to play the game, not so much play to earn. Now, I don't think the category play to earn is over. I think I'm still very encouraged by it. I think it's a new paradigm. It's this idea of having guilds and playing and creating entirely new economies. The same way that Uber allowed you to make money off of your idle asset called a car, or Airbnb in the same manner to like rent pieces of your house that are not being used. I think play to earn is play to earn, or play and earn will work, particularly probably better to a greater extent with games that are very immersive and attract a combination of spenders alongside earners. And so it's important to have that healthy and monitor that healthy ratio and composition of the user base that comes into that game. Now, mind you, historically, a lot of games like Candy Crush and Angry Birds and stuff like that have relied on a very, very small subset of users. Like, I think it's like 1% of users account for like 90+% of revenue or more, right? And so that kind of power law distribution is perhaps, like you would argue, it's unhealthy, and I think it speaks to a lot of the problems that Web 2 games have had historically, right? As soon as you lose those kind of big spenders, like you're done, you're cooked, and you have to like roll out a different game. But I think Web 3 games have a lot of more hooks and the ability to retain those spenders much more so by creating these ecosystems where you have a lot of functionality. You build a game, and then you attract other people to build around that game, and so your sword in a particular game might be used in another game, and so that user and that the economic value of that user is pretty strong, because in a similar manner that you can buy an NFT and the artist that is minting that NFT and the creator can earn fees on both primary sales and secondary sales. I think these games might stand to, like Loot, for instance, or Illuvium, right? If you have the ability to have open APIs and people to build around that game and create other experiences for people it brings more utility to the game, right? And the assets that you're earning. And so, like, whether it be a sword or XRP, like experience points or whatever. And so that really kind of creates a very dynamic, thriving economy where the user is still very much like interacting in that hub of a game, right? He might be playing different types of games, but at the end of the day, like, value stays within that economy, doesn't leave. And so that's what gives me hope and encouragement when I'm looking at these games and saying the key difference here is like the same way that the App Store has made the iPhone a killer kind of product. I think in the same way, a lot of these game studios will perhaps build a first killer game and then have open APIs where people can just come in and build other game experiences around that, right? And so build a lot of utility and reason and incentive for people to stay within that game and to use a lot of the items that they've earned in that game, as opposed to sell, to just continue to play in other games and earn more points and more, it just makes it a more fun, interactive experience.
Right. No, I think you're right about that. And I think for me, the way I look at it is that play to earn isn't a completely different business model, because at the end of the day, these companies will be making money through user spending mainly. That's where gaming revenue comes from today, and I don't see why it shouldn't be the case in the Web3 model. I think it's just a better user acquisition funnel, more fairer to like the relationship between the game studio versus the player. I think it's more fairer when you have an option to sort of exit, sell your assets into the market. You have that flexibility. So I think it's more of a user acquisition channel, a marketing thing, less about actual, because I think you can do play to earn in a centralized game scenario as well, right? Like if you're a really popular game, you have your own launcher, you can create a centralized marketplace to trade your in-game assets. I mean,
Twitch did this,
right?
Yeah,
and so did Steam, right? For a while. So I think it's definitely not a complete shift, but definitely something that is going to attract a lot of new eyes.
Absolutely.
So gonna quickly move on to the final question, which I want to ask you about your key learnings from 2021.
Mm-hmm.
And what was like let's say, that this past year, what was like the main things you identified that you'd probably want to share?
I think, it's always important to like continue to monitor things, right? And seeing and staying on top of trends. I was blown away by the activity that I saw in a game like Axie and NFTs and the volume that you saw on OpenSea. And so I think as an investor, it goes back to a lot of things that we talked about in this episode, which is you always want to continuously process new information, adjust your probabilities of your theses, and nothing is ever in a binary state. And so I think when you think in finite and sort of binary terms, you shut yourself from processing new information. And I think the best you can do, when I've learned, is largely by making these mistakes, is always thinking in probabilities and adjusting, calibrating my thesis based on new information. And the beauty of all this is open source systems And blockchains are data rich. And so you are able to inspect, you're able to monitor and track a lot of this information in real time. And so a big learning for me has always been coming from traditional markets and investing in traditional venture was I never felt like I had an edge there. And I always felt that like, look, there's so many eyeballs, so many people doing the work. Like probably there's someone out there that has better information, has done a better analysis than I have. And after being like 12 plus years in this space, I tend to believe that like, it's kind of shocking that a lot of this information exists. But I do wonder at times how many people are actually doing the work and looking closely at the data and inspecting it. It's crazy because it's sort of paradoxical because there's all these tools exist. You have an answer and you have the graph. You can do an analytics. You can do a lot of this work. Not only that, but you have all this access to founders and Discord channels, and they make themselves very available. And so, I do get it. Sometimes institutions, venture funds, do get a call first from founders and participate in these rounds. But also, I think there is this shift, especially with DAOs and especially in the manner of these crowd sales, where you can't get involved super early. And it is flattening. I don't buy this argument, VCs have an edge and a huge advantage. I think that advantage, yes, exists, but is largely like degrading. And in this space, rewards people to do the work, but not everyone does. And so it's just hopefully a word of encouragement for everyone out there listening, which is this space has so many opportunities. And that's the beauty of open source systems, that they reward people with good ideas, with discipline, and willing to put in the work. And I hope that I think that is one of, if not the most awesome hallmark of this space. And part of the reason, largely the reason why I'm here, because I continue to be super encouraged by the caliber of human capital entering the space that appreciates that. It's like, wow, yeah, this is a more distributed, more fair, more equitable ecosystem. And I think that ultimately attracts smart people to come in here that know that they can stand to benefit much, much more for the quality of their contributions versus being in a more siloed, hierarchical kind of Web2 company that is, rewarding and the value is being accrued by a very, very small sliver of people that might have been lucky, that might have been early, but may not necessarily be the ones that are doing the decisions and doing the work. And so I think that's largely very encouraging. So that's by far kind of the biggest learning that I've come to appreciate much, much more over the years.
Right. And that's a great takeaway as well as a great synthesis for the entire crypto movement, especially the phase that we're in right now.
Right.
So,
Thank you.
Thank you for Santiago for, joining us today on the podcast and sharing your thoughts.
Thank you, Akash.
Had a really incredible time learning from you.
Thank you so much.
So I'm going to let you go.
Thank you so much,
and
Akash.
Probably catch you later again sometime.
Absolutely. Happy to come back here. Hopefully people enjoyed it. And thank you so much for inviting me. And I hope my thoughts, prayers go out to, obviously the situation in Ukraine is very sad, unfortunate, but I think hopefully things get resolved soon. But nonetheless,